Welcome to the Building Web3 podcast. Today I have my good friend Ryne. He is the co-founder at Eco. Before we get too deep into your background, give us a brief explanation as to what is the mission at Eco and what led you to co-found this project.
The mission of Eco is basically to give a person the simplest possible user experience on chain using stablecoins. Very simply it. If this technology is going to scale, if crypto is going to scale to be what we want it to be, we got to make it really simple to hop on chain and really simple to hook into whatever else you want to do on chain. So, the earliest vibe of our mission is to make people's money work for them, and then that just happens in phases as the technology becomes more inevitable over time. And so that's originally what motivated us as well. Is just inevitably a better way to hold and move money. You got to translate that to a user experience and to maybe a new superpower that the average person can realize from using the tech. And that's why we're still at it today. That's taken a few different shapes and forms, as you know, a couple different product cycles along the way. But basically, at the end of the day, we're just trying to make people's money work better for them by putting stablecoins in their pocket and helping them flow better cross chain in the present landscape.
And I'm curious what led to this. So I was talking with the Optimism Foundation, shout out to Vinci, this morning, talking about how we both had experiences living abroad and how difficult it is. Like somebody might have Wise or Venmo, or actually sending money to your parents is really difficult. What led to you guys founding this project? Was there a specific pain point that you recognized, or you just noticed that in the market there was a gap?
Kind of both. There's a couple things. Everybody that had something to do with starting or initially contributing to this project or company had felt the pain of the traditional payment stack. So a couple people coming from like the payment compliance angle, a couple people coming from like the card processing world, a couple people coming from the e-commerce world. There's a really good like sense of wrestling with that stack and where it actually breaks. That's mostly abstract from the average person, but when it breaks and you are the person it breaks for, it becomes incredibly painful to figure out why, and ultimately to get your bank to help you resolve the issue. And so we felt that pain. And then several of us were earlier in crypto with kind of like an international lens on just like currencies not working very well. Something we take for granted here in the US, but a few of us had seen that firsthand and kind of like saw the early promise of crypto to maybe have something to say about that. And so they just kind of like very simply clipped early on, like this is inevitable as payment technology. It's just going to take over that space. But ultimately, it should have a lot to say about the banking system and the way it relates to its consumers and moves money as well. And I think that takes on maybe a different app UI UX, a different pitch in places where your currency works better or worse. But ultimately, I think it holds true. The go-to-market might differ in different places, but we found our own niche here, and we've been chasing it ever since.
Yeah, let's talk a little bit about how payments exist today, and we'll call it like Web 2 world, or the area in which you wanted to improve, and then talk to us about like the future state of eco and where you imagine it going, because most people will say like, crypto's only probably achieved two areas of product market fit, one being stablecoins and the other being DeFi, which is partially stablecoin. So talk to us a little bit about like what's broken in the current payment system and how you guys are aiming to resolve it.
Well, I mean, I think clearly there's an interesting missing like sort of like incentive alignment in the current payment system, whereas like banks are the endpoint, oftentimes are the entry point, and sort of the marginal cost that you can justify for a transaction has gone down, down, down as settlement's gotten smarter, as software has gotten smarter, but the banks need to make that up somewhere. So they're just like literally a huge fee mismatch today in various types of payments. ACH costs have gone way down, but it's still way too expensive. You can do it on crypto 2 orders of magnitude less now today. Wire is just a joke. You can do that with crypto 4 orders of magnitude less today, right? And so that's just inevitably needs to be disrupted and chipped away. The card stack is its own set of problems. On the one hand, it's like an incredibly impressive piece of technology. Like think about the scale of the Visa networks settling transactions worldwide day over day, and the technological kind of evolution of that from the 60s, 70s, all the way until present day, dealing with e-commerce. Like it's incredibly impressive. To say that it doesn't work as well as it should is like is not insulting to, I think, to the scale of the tech, but it still doesn't work as well as it should. The internet brought a bunch of new challenges to the payment stack, introduced a bunch of new middlemen to control for fraud, chargebacks, et cetera, et cetera. I think the average person doesn't realize it when you swipe a card, or maybe more appropriately when you use it online. there's going to be anywhere from, like 4 to 8 software middlemen in the middle that somehow skim and add to that fee structure. They usually provide value added services, control your data, et cetera, make sure it's not a fraudulent transaction. But I think with use of crypto, we can cut most of those out and return margin to the end parties, which for a small business is going to be really, really meaningful. And so that's one other reason why we think that crypto is just inevitable as payment technology. And as far as sort of our role in it, we just want to make stablecoins flow super intuitively, right? If this is smart money, you should be able to hold an available balance that is your, ticket to ride to anything you want to do that's crypto powered. Um, as an average end user, you shouldn't have to worry about native assets. You shouldn't have to ever intuit gas anymore. You just have an available dollarized balance that completes a transaction, and the network should know how to route it and how to settle it without you really having to worry about it. If this is smart money, then every on-chain interaction for the average end user needs to effectively be Amazon one-click checkout easy. And that's where we want to sit. That's the user experience that we want to enable. And so everything that we build to do anything with liquidity or transaction routing is to the end of making that user experience a table stakes expectation for someone.
And real quick before we get into the exact implementation of this, you mentioned chargebacks was something I hadn't thought about, but now that you mention it is quite important. Talk to us about how you kind of address chargebacks in the crypto ecosystem, because like if people use a traditional payment processor like Stripe, if an account starts getting a lot of chargebacks, that account will have its money held up, completely get shut down most of the time. And yeah, when you swipe a credit card online, it goes through a lot of different intermediaries. Talk to us a little bit about how you guys are kind of looking at that system. Are you not considering chargebacks, or how does that work in the stablecoin environment?
It's not something we're directly building for, but the best implementations I've seen to kind of like deal with that in a native on-chain environment, there's sort of like hybrid on-chain payments, which take a stablecoin from the blockchain, essentially off-ramp it and like settle it as a dollar. And there's almost always going to be some dispute resolution layer that's like custodial and company sponsored in between there to deal with the possibility of a refund or a chargeback. Then the kind of like harder technological problem set is like the pure on-chain stack, where there's no intermediary effectively except for the blockchain itself. The best implementations for that generally like require some set of network observers to post a bond. And if there's fraud found in the transaction, enough people agree on that, they pull from the bond pool and they're able to ultimately reverse it while somehow knocking the fraudulent party. There's good dispute resolution games people are building for that. I don't think that they're ready to like scale to credit card scale in the real world for a couple more years, but you can build that in sort of like the economic security of that into a transaction very, very soon. And so it's an interesting thing. It's like chargebacks add a lot of risk and a lot of fee structure to the traditional stack. That seems inefficient, but it also is like a value add to the average end consumer. So it's really it's kind of like an ironic issue in like the crypto payment stack. You want to get rid of it automatically because you can return the fee back to the end user in the form of savings, but it does provide an important function. And so I think that as kind of crypto payment providers have matured in the way we're thinking about this over the last few years, people have gotten a little more serious about dispute resolution, economic security in the transaction. And if the transaction is not reversible, at least there's a bond pool somewhere that you can pull from to ensure that the user's made whole if something goes wrong.
Yeah, that makes a lot of sense. And then talk to us about how in implementation like how people would see your product. Is this something that's like purely business to business? Is this like a B2C play as well? Talk to us a little bit about like how this actually manifests.
Yeah, I think it's more like B2B to C. Mostly sort of apps developers are our customer and our audience, but we give them something that allows them to translate our tech into a user experience that's increasingly standardized. And so, you know, in its present state, there's sort of two things that we offer, really simply stated, routes and accounts. And routes are something that an app or an app chain, if that means something to you as a crypto listener, can connect to ensure that liquidity is interoperable between a number of different sources and destinations. For a lot of crypto apps or crypto app chains, they want to attract liquidity and settle it in a particular way, and they want to be able to do that from various directions at the same time to increase their target market. And so that is something that we enable, and they can configure routes to have logic that somehow serves their use case more efficiently. But where the end user might interact with Eco is accounts. And you can think of accounts as kind of analogous to single sign-on when you click sign on with Google or Facebook today. But it's just a signing pair on chain. It is crypto. And so accounts kind of aggregate your available balance, It shows you, regardless of what mix of stablecoins you hold or where you hold them, you have, for example, 100 available. So you know that's your spending power, and then it can route them and settle them wherever else on chain you want to do something. And as more of sort of our route integrating partners also adopt eco accounts, you can kind of imagine this more standardized user experience across the network that just taps your available balance wherever it may be, routes it wherever it needs to go, one-click transaction experience as it should be for most use cases, and denominate the entire experience in stables. Okay, we are done with the psychological leap of needing to make sense of ETH, Matic, et cetera, whatever L1 asset you need to make sense of to participate. Now we can abstract all that away and we can dollarize the entire experience end to end, which is just like way more intuitive for the average new person coming in.
Got it. So this is reminding me a bit of Arcana, or maybe Particle themselves, and then with a specific focus on pretty much stable coins. Talk to us a little bit about you. You mentioned the developers were the main, kind of the main target audience. Talk to us about like who is implementing this and like in what way, just to make it a bit more concrete. Is it like, hey, I'm a developer, I'm creating Jax protocol and I want to have a unified account so that they can see their balance on Arbitrum, Optimism, all of these different things, but it feels like all their USD is on actually one account, like chainless, so to speak. And then I'm trying to talk to us then where the stablecoin transactions come in. So like we can walk through whatever example that you have, or we can just make up an example like I have. Just
Mhm.
walk us kind of through like the life of a transaction of using something like Eco.
Yeah. So in its beta state today, the typical use case for routes is for an app chain developer. What does that mean? It means that someone's building a roll up, typically within the Ethereum ecosystem, to do a specific thing. Okay, not a general purpose roll up for other people to build on, but a great example would be gaming. Someone maybe is building a gaming L3. So you're standing that up. You want, you have some fee structure. Either a user has to pay to play, or you can buy skins for this game, or some other like in-chain, like sort of like in-game on-chain currency, any of these things. Someone needs liquidity to get into your system, right? Well, traditionally, there's a couple problems with that. One, you need to convince a user to move their liquidity over and hold it there. And that's not a standardized experience. Not only does it involve multiple steps that you demand of the end user, but it lands in some balanced translation that may or may not be familiar at all in the UI UX. And if you want to enable them to do that, you need to integrate a bridge, which to date has not been that easy for developers to do. It comes with a number of trust trade-offs that they may be more or less comfortable with, maybe more or less transparent, and the integration experience might be a little bit heavier lift than you would like it to be. So we want to come at that in a couple different ways. With routes, we want them to be very configurable, as I mentioned, with their logic, so the developer can kind of opt in and out of whatever trade-offs or functionality they need on both ends of a transaction, and really, really easy to stand up. Like literally click to opt in when you're standing up your rollup with a rollup service provider. I want to enable eco routes between A, B, C, and D. You click the mouse, you don't have to deploy contracts on chain. It all just sort of happens in an instance. And then also, you don't necessarily need to convince every potential end user to bridge their available liquidity into your chain up front, right? If you integrate eco accounts, you can read from their balance elsewhere and they can sort of bridge in the moment when they have demand. That depends on your use case. Some app developers or app chain developers want the liquidity in. Maybe you're rolling a new DEX or some sort of trading market. So you're going to incentivize people to bridge that liquidity in and hold it on your chain. That's fine. That's your use case. Our routes can enable that. But if you don't need to do that, if all you need to know is your user's available balance elsewhere to pull in the moment they want it, then it eliminates that hop for the average user to need to commit to your product, which is pretty significant from a consumer onboarding standpoint.
And then let's talk about functionally how some of this routes technology works. So off camera, we talked about a few potential integration partners. Talk to us about like, are you guys using intents? Are you using like some kind of messaging system between so you never actually have to bridge? How does it all work in practice?
Yeah, we do use intents. We prefer an intent-based paradigm today because it just translates to the best user experience most often. It'd be, I could talk more about the trade-offs maybe in the future with an intent paradigm, but I think today it gives the best available user experience. So an eco route's an intent, sort of a liquidity bridge with an intent-based paradigm. Um, you know, if you don't know kind of what an intent is and you're listening, think about Uber. Uber's an intent protocol. We were really bad in crypto about inventing new terms we didn't need to invent. Intent, as an example, it really just means you get to do the thing you want to do without thinking too much about it. So when I order an Uber, I don't get to say what the exact route is. I don't get to pick my driver. Those are assigned to me, but I do show up where I meant to, where I wanted to. And this is really similar in the on-chain transaction context. I just define where I want my money and what I want it to do. And then it goes into an order flow where a filler or a solver says, I have liquidity and I can provide you that service for a small fee. And they compete to provide that execution to you. So as a user, you just click a button, you order the transaction happens according to your requirements, and there needs to be some validation that that is true. So that's how the sort of an eco route works. And then what the validation step is one of the configurable parameters. So in terms of validating this intent, my transaction was completed how I wanted it to. There are different paradigms or different sort of like message passing methods that you can use. They come, sometimes they're faster or slower, sometimes they're a little bit more trusted or less trusted. And to date, a lot of liquidity bridges have just like baked that in, hard coded the trust assumptions of how a message is passed. One thing that we've done is modularize it so that a developer can opt in to like fastest possible path, even if it adds a new trust assumption, slower path because we don't need the speed. We just want to maintain an on-chain native posture. The developer can opt into that according to their preference. And so one of the innovations with an eco route is sort of like modularity with how you pass the validating message underneath it to make sure that a transaction happens like it's supposed to.
And when you're saying modularity, are you saying like, hey, they can come in and they can actually swap in different like messaging protocols?
Yeah, so you can basically define your proof construct for how you wanted to validate and settle the transaction.
Very interesting. And how would this manifest? Is this like something like a gelato of sorts? Obviously not like gelato, but like where you could go in there and you could select like, hey, I want this kind of messaging or I want this kind of
Yeah,
trust assumption. Oh, very
yeah.
interesting.
So you can stand up your routes between your ideal destination and source set of them, basically. You can define your settlement asset, which for us is limited to stables at first. Um, and then you can choose exactly how you want to validate those transactions. And so we're kind of going from like most trust neutral and maybe slowest settlement process to faster with kind of transparent trust assumptions on the way up. And we'll have various proof methods. So one's a storage proof method. We're working on that with several other parties on chain. There's actually kind of a generalized implementation of it that Base is sponsoring right now called RIP 7755 that uses storage proofs available in L1. Data's already there. You can pull it and you can validate that something happened on a destination rollup. That's really interesting. That's been hiding in plain sight for like a year and a half. Finally, someone built it. Um, Another one that we're about to demo really soon is a hyperlane based method, which we're pretty excited about. They're pretty excited about. We'll have something to show there at DevCon, and maybe even some Polymer proofs and a couple other messaging alternatives to follow shortly thereafter. So we think that optionality is one potential superpower in the system.
All right, so we've got the routes, we've got the accounts. Talk to us a little bit about stablecoins because not all stablecoins are created equal. Do you guys have like an opinionated basis on like USDC or USDT? And it just seems like I think 32% of all transactions in crypto are like the stablecoin base. So it seems like
Yeah.
more companies will rush in here. What do you think about like choosing different stablecoins? Are you guys pretty much agnostic on that?
Today we're rather opinionated. We want to become more agnostic over time. Because I know today from it, and this is purely from like a pragmatic product scope go to market perspective, I can choose four stablecoins and cover 90+% of the market demand for transacting and settling. Okay. That's just the way it is. And so I can get maximum coverage with sort of like minimal scope there by just deciding to support those initially. However, that's not ultimately something that we want to kind of bake into the system. I think it's safe to say that most parties are going to feel best, feel safest settling in one of those four stable coins today. But ultimately, there's going to be a bunch of new entrants. It's the stablecoin season again. There's been one already. If you were here in 2018, 19, there was like stablecoin season one. Most of those didn't work. But you could call them necessary experiments. I think if you've been watching the space this year, Athena has a harbinger of stablecoin sort of season two. Real yield on underlying assets as well as Athena rolling its own model, like that's just going to lead to dozens of new entrants. It already has actually, and they're all going to be basically competing for market cap. They're all going to be trying to break through that nine-figure kind of proof point to get to mid cap and ultimately large cap in the stablecoin market. Really, what we want to do in the end is to basically make eco a liquidity network. And we want to sort of provide a liquidity hub where a lot of this transaction settlement can happen, where users kind of like hub balances can be read from and can be held, and a stable swap network in between if that provides the best execution for any stable send cross chain. The reason I'm bringing this up right now is kind of like this is the ideal end state. It's sort of a user experience that connects to a liquidity network that provides users the best possible execution. But what's interesting about that is if you have a liquidity hub that forms over time, then a lot of the new entrants can come in and try to compete for order flow and liquidity to increase their market cap. And that's where I want to become less opinionated over time. So once you get outside this beta state, then I want the liquidity in the system to be totally permissionless. And I want to work with stablecoin issuers to say, hey, issue your stablecoin along these valuable transaction vectors in our system that are already flowing. We have some data there, and try to incentivize users to settle in yours instead of the existing player and see whether you can compete for liquidity that way among the other ways you're trying to get into the market.
And do you have an opinion on, because when I look at stablecoins, I think of it as a winner take most market where, like, I'm here in Medellin, Colombia. It's actually sometimes hard to find someone that will accept USDC. They pretty much
Mm,
all want USDT. So do you feel like it's, these new market entrants, obviously Athena's done very well, but like as we see a proliferation, like more stablecoins enter the market, do you think like anyone else can really take market share, or do you think there'll be like three or
yeah,
four predominant players?
no, it's so early. It's so early, and there are still so many use cases for stablecoins. There's localized use cases for stablecoins. There's like different use cases within the payment stack or the financial markets. You can think of one stablecoin becoming super valuable for like wholesale transaction settlement in like a B2B or an interbank context. You can think of a wholly different stablecoin model becoming sort of the default for consumers in different parts of the world. And it's just still so early. Um, so it's hard for me to say. I think that you might end up with winner take most within certain segments, but not within the entire kind of like marketplace or sort of like total addressable market for what stablecoins can become.
Yeah, that's something I was thinking about recently. And then obviously some recent news is there was the bridge acquisition by Stripe. Talk to us a
Mhm.
little bit about, that acquisition and kind of where there's like the delta between your guys' projects and what they brought to the market and how you guys are differentiated.
Okay, sweet. I love this question because we've known that team for a long time. We kind of understand what they've built pretty well because in a prior season of the company, we were in the custodial stablecoin kind of compliance laden world of being that type of product. And we worked with Bridge on some transaction flows or some early designs for some of our features. And so we understand pretty well, like Bridge's moat is kind of like operational compliance, on ramping, off ramping, and obviously they launched a super successful like stablecoin issuance platform earlier this year. But really, what they do is stablecoin orchestration. So really easy on ramping and off ramping between stables. And from like a business payment acceptance context, they allow like a business to accept stablecoin payments in a particular asset. Uh, and that's a great business, it turns out. Even a threatening business, I think, as you might read into the price point, right? And so it's really validating. It's like validating that all these things keep happening to sort of validate the inevitability of this technology, which is great. It's not just sort of us degens for the last few years trying to tell people that it's inevitable. It's like market validation with real companies that are important in the world adopting this stuff. So it's really good. It gives us kind of our own validation within the way we explain ourselves. Basically, we've been talking about stablecoin orchestration, for a long time, and we just say we're just doing on chain, right? So what Bridge did great was build the compliance construct and the operational framework to help people get on and off chain. But ultimately, we want to do this for protocols in the world, for on-chain apps in the world, and make it super easy for them to do orchestration and settlement and stablecoins in a really intuitive way. And so it kind of validates the use case. It's just that we operate at the protocol layer instead of trying to build a SaaS layer on top of it. Um, there's kind of like a bonus answer to this question, if you will, which is for years, again, we come from a payments background. People have kind of like said loosely, oh, like stablecoin payment adoption is chicken or egg. It is not. It is definitely not. It has not been for a long time. The reason to accept stablecoins and the incentive to do so has been clear to many merchants for 10 years. But many of them are not going to incur, unless they have no other option, they're not going to incur the risk or the overhead of a new payment integration, especially novel technology, until a million consumers are showing up with the stuff in their pockets. Not chicken and egg. You got to put it in consumers' pockets first, at least for the merchants that are going to move the needle, right? That might be changing a little bit. For 10 years, I've been unapologetically saying it is not chicken and egg. Um, this acquisition might change the equation a little bit and rebalance it because it's going to make it extremely easy for smaller businesses online that are already Stripe customers to opt in, essentially risk-free, to a stablecoin transaction acceptance option. That's with the service extension that Bridge is going to ultimately provide. And that might move the needle a little bit on the merchant side without waiting on so many consumers to show up with the stuff. I think they're increasingly confident that consumers will eventually show up with more of the stuff. And now it's easy and low risk enough for them to integrate that payment method that they can do it through Stripe's platform. And it may not be so stark a sort of imbalance as I thought it was for the last several years.
Now, I'm trying to remember who exactly. I think I was talking. Yeah, it was with the Infinex team. I was talking with the Infinex team recently, and we are talking about onboarding and
Sweet.
offboarding. And this is one of
Hmm.
the trickier parts. Like when we would try to be like, "Hey, everything's going to be on chain." It's like, well, you still need to get money on the platform, and it's still a little tricky to get money off the platform for these
Yeah.
like businesses. How are you seeing them? Like, is it just that like users will be more on chain in the future so that they'll be bringing their own stable coins, or like how do we get more stable coins in people's pockets and then allow them still to use them in their everyday life?
I think, I mean, clearly there needs to be an incentive to do so. There's two clear incentives. One is yield and one is rewards. That's it. We build a consumer app that kind of try to leverage these incentives with some level of success for a couple of years. You need to get better yield, safe yield, and make it like easy to access. That bar like is like the access bar is like lowering quickly. There's a lot of like real world asset yield like bearing stable coins that are now institutionally backed, where if you just can sign up with an account with an institution as opposed to like getting a crypto wallet, you can get the stable coin and earn yield. Um, and so if that yield is like superior enough to the real yield environment that's sort of in the macro markets, then people will move. It needs to be 4 to 5% better. We've learned that. Otherwise, most people are not going to go through the friction of crossing over. Um, there's more of like a backdoor incentive method, which is to do it with rewards. People love rewards, obviously. People love stacking points. People love being loyal. They love getting status. If you can somehow integrate a stablecoin access and transaction flow into like a really, really good reward loop, then I think that you're doing something interesting that kind of like backdoors the intent of holding a stablecoin. And the best example of that is Blackbird probably right now, which is this restaurant access app that uses stablecoin as a transaction flow or one of its transaction flows and tries to incentivize it. And to like get these hot seats at really good restaurants or these really good offers um, that open up last minute, and to feel the status of being in the club, you got to pay this way. And they hook it up to Coinbase, and so it's like really easy flow, and um, you get rewarded for doing so, and you're kind of in the club, and it's seen successful adoption. I think those are the two methods, and you just got to find the consumer loops to make it easy.
Yeah.
Um, Along the way, in the more boring corner of the world, on-ramps will get more efficient. They'll get faster. Their data models will get better. You'll go from minutes to seconds in a lot of geographies for a lot of methods. That's just taking some time due to lack of regulatory clarity and just due to some like data management issues.
Yeah. And one thing on this podcast, we have a lot of builders that listen to it, and we're perennially interested in new startup ideas. So is there an area of the crypto ecosystem? You mentioned, this app where you can get into, clubs early access or like last minute. Talk to us a little bit. Do you have an idea, or you feel like there's an area of crypto that's very underdeveloped, but is a good idea? Or do you feel like payment orchestration? We're always looking for interesting ideas.
Um, okay, this is kind of a funny one. I will go to my grave believing that the app that we had to shut down is a multi-billion-dollar product for somebody else to build. It is not a purely on-chain product. It's a custodial consumer product. Um, Really simple. Give people better yield on their balance, holding USDC, give them better cash back with spending partners if you can successfully get them on the other side. It becomes a singular compounding experience. You don't have like this checking and saving split. You have a singular balance, always in stables, always earning yield. And if you're stacking better cash back on top of it, it literally compounds faster the more that you use it. And you can make the user experience very, very simple if it's a custodial product to start. And then you can bridge people on chain more toward the deep end, always opt in if you want to expose those options to them. Uh, that's a killer app for somebody.
Yeah. Off
We,
rip, I can
we
think
had our day. Yeah.
off the top of my head, I could see this being a very good Telegram app. Maybe you could make some like pay with Telegram. They already have the wallets integrated, and then it would just be getting a bunch of partners in there and making sure their USDT balance or whatever the stablecoin balance is getting some kind of, you know, good reward to keep people on.
Yep. Exactly right. If there's a builder listening to this that wants to build that in a new era, come talk to me. I'd be glad to share some insight. We learned a lot. We spent years talking to people about their money. We spent years building a product we were really proud of. Ultimately wound it down because the banking sort of environment underneath it became pretty tough. But I think ultimately, maybe in a more permissive or mature regulatory environment, it's a really, really killer product still.
Yeah, absolutely. And what are some of the upcoming milestones and features you guys have coming out that we can kind of keep an eye on?
Beta release is happening over the next couple of weeks. So more of the partners supporting these routes are going to kind of like go public and say we're building with these routes. Then accounts will roll out. Um, and you talked to the Infinex team. The way that they're trying to leverage kind of like that signing pair on the way in with maybe like an SSO type of user experience, really similar to the way we've been thinking about it, the way we've also built it. That's fine. I think we're talking to different audiences. You go to SSO today, there's Facebook and Google both. You're right. There's room there. But I think that they're thinking about it in a similar way, and I'm glad they are because that user experience is like really, really seamless. So you can look for accounts to be that type of paradigm and to be rolling out in the couple of months after routes are made public. All of this ultimately rolls up into a protocol launch that is a new eco in the first half of next year. And once we get volume flowing through routes, once we get users into accounts, they will have the data for where users incurring slippage, whether it's in the experience or in the literal cost of a transaction, where a liquidity provider is like inefficiently allocated within the network, what long tail chains do people want to get to where there's not enough coverage today. How can we standardize the user experience better? I think you can find a lot of capital efficiency and really kind of like drive the UX, uh, you know, even deeper in terms of how good you can make it once you start to understand that data. And I think you can start to aggregate liquidity and allocate liquidity within the network in a way that's increasingly intelligent and ensures that users have the best possible execution with the simplest possible experience. And so I think you start with coverage, routes, kind of get some end user standardization with accounts. And then I think there's a lot more that you can do with liquidity aggregation that starts to look a little bit more like a traditional crypto protocol.
Well, very exciting. Well, where can people keep in touch with the project and you specifically online?
We're simple. I'm Ryne Sachs, RYNESAXE, right? On Twitter, you can hit me there. And we're just at Eco on Twitter. Simple as can be. ECO, it's a great space to own. So you can keep track of the protocol there. Companies relinked there if you want to keep track of some of our internal roadmap stuff and the people working here. And you should really watch over the next couple months. We have a lot to show.
Absolutely. Well, in a very exciting future, and everyone go keep in touch and let's continue building the future of Web3.